Welcome to the deep dive. Today we're getting into something really crucial, something impacting all of us globally, how the conflict between Israel and Iran is hitting the world economy. Our mission here is to pull out the key insights from the sources, really understand the market reactions, energy security, and the bigger financial picture.
It's definitely a vital topic because what starts in one region, well, it doesn't stay there, does it? It ripples out. And what's really interesting is how markets reacted initially and then how they sort of calmed down a bit.
Yeah, that initial volatility was pretty stark, wasn't it? What were the immediate standouts you saw in the sources?
Well, global stocks, the S&P 500, the Dow, they definitely took a tumble. European markets, too, like the STOXX 600, fell nearly 2.5% in just that 1 week. But the interesting part is after that first shock, things did stabilize somewhat. Maybe investors quickly decided the immediate risk was containable, or perhaps that level of instability is just priced in now.
And what about the usual safe havens, gold, for instance? And which specific sectors really felt the pinch or saw gains?
Gold did exactly what you'd expect, acted as that safe haven, yeah. Trading up near its record high, around $3,500 an ounce.
Okay.
Sector-wise, energy firms like ExxonMobil got a boost. Same for defense contractors, Lockheed Martin, BAE Systems. But airlines, travel companies like Delta, United, they dropped. Higher fuel costs, security worries.
Makes sense. A clear flight to safety and a move away from risk. Now, beyond those immediate market moves, the sources keep coming back to one critical spot on the map, the Strait of Hormuz. Its stability seems, well, pretty precarious right now. Can you paint a picture for listeners? Why is this strait so incredibly important?
Absolutely. So picture this narrow waterway, right, between Oman and Iran. It connects the Persian Gulf to the open ocean, the Arabian Sea, and it's just about the only way out for tankers from the Gulf.
And the volume going through there is huge.
Just massive. In 2024, we're talking an average of 20 million barrels of oil per day. That's like it's 20% of all the petroleum liquids the world uses, plus about a fifth of global LNG trade. So it's not just some abstract risk. The global energy system, especially Asia, really depends on this single, narrow passage.
And if it gets disrupted, what do the sources suggest the economic fallout could look like?
Well, there aren't really good alternatives for moving that much oil, not quickly anyway. So a closure, even partial, means big supply delays, much higher shipping costs, and almost certainly a spike in world energy prices.
How high could prices go?
Some analysts are saying oil could shoot past $100 a barrel, maybe even $120 in a worst case scenario. Saudi Arabia and the UAE have a couple of bypass pipelines, but their capacity is only around 2.6 million barrels a day. Nowhere near enough.
Not enough to cover the gap.
Not even close. And here's a key point. Most of that oil and LNG, like over 80%, goes to Asia. China, India, Japan, South Korea are hugely reliant. The U.S. actually imports much less through there now, lowest share in almost 40 years.
So Asia bears the brunt of that specific risk. But this isn't just about potential disruption, is it? The conflict is already causing real economic pain for Israel and Iran themselves. What are the sources saying about Israel's situation?
For Israel, yeah, this is hitting hard. It's shaping up to be the most expensive conflict in their history. Just the first 2 days fighting Iran cost an estimated, $1.45 billion?
Wow.
And their defense budget for 2025 is projected at $34 billion. That's pushing up against their deficit limits. Plus, you see other signs like 60,000 businesses closing in 2024, tourism way down. S&P Global Ratings is even warning about a possible credit downgrade.
Which means higher borrowing costs.
Exactly. More expensive for Israel to borrow money, and it makes investors nervous.
And Iran. Their economy was already struggling under sanctions for years. How is this escalation affecting them?
Iran's economy is definitely feeling it. Reports suggest recent strikes damaged some key energy infrastructure, like partial shutdowns at the South Pars gas field. That field produces most of their gas, maybe 80%. And oil exports are way down. Karg Island, which handles over 90% of their oil exports, reportedly stopped shipping. The currency, the rial, has lost, over 90% of its value against the dollar since 2018. Inflation is rampant. Some estimates say over 50%. A lot of people are below the poverty line. It's a really tough situation.
It really underscores the human cost. So zooming out again to the global picture, what are the wider implications for inflation for world growth? Central banks must be watching this very closely.
Oh, absolutely. If oil prices stay high, it could definitely reignite global inflation. That makes life very difficult for central banks like the Fed here, who are already worried about inflation sticking around. And the IMF, They've already trimmed their 2025 global growth forecast down to 2.8%, citing geopolitics. It's not happening in isolation either. You've got things like the U.S. tariffs on China causing trade flows to shift around Asia and Europe, adding another layer of complexity and potentially strange disinflationary effects in some
It's
places.
a complex web. So given all this uncertainty, what's the advice for you, the investor, trying to navigate this?
Well, the experts seem to agree. Stay disciplined. Avoid knee jerk reactions like panic selling. Diversification is key, maybe including some gold or low volatility assets. History kind of shows that markets, while they react sharply at first, tend to find their footing again after these geopolitical shocks.
Okay, so perspective is important.
Very much so.
So here's a final thought to leave you with. Given these deep interdependencies we've talked about, does the line between economic warfare and traditional conflict start to blur? And what might that mean for global stability moving forward? Something to think about.